Good morning, fellow traders, and welcome to today's live session. As you guys know, today is May 17th, 2023. It's the middle of the week. It's a Wednesday. And what we're going to do is try to see what price is doing, where it's going, where it's coming from, and then figure out some trading ideas or trade setups from what we're observing in the market. But I hope this week has been a decent, solid trading week for you. I hope you didn't make too many mistakes. I hope you've been working on improving your execution as a trader. But for the most part, if you still have room to grow, of course, there's still more time. Don't give up on yourself. Sometimes it could take years to really master these markets. But what we're going to do is look at price action, and we're going to try to figure out what exactly is happening with price. So as you guys know, we typically start off these sessions with looking at day trading opportunities, primarily on the 1 hour chart. But what I'm going to do from here on out, I'm just going to explain each setup, but do it from a top-down basis so that you can understand why we're doing what we're doing. So with that said, I can start with this first pair, and it's the US dollar Japanese yen. Yeah, good morning, Marcus. Thanks for coming. It's the US dollar Japanese yen, and we're currently looking at the daily chart. And as you can see, for the most part, we're bullish on this pair. You can see for the past few days, the US dollar Japanese yen has been making significant gains. Each day it's been a bullish day, a positive day for the US dollar Japanese yen. So then right now our bias is to the upside. We have to be aware of the fact that we are testing resistance or supply, or we're approaching it. Yep. Good morning, Naomi. Thanks for coming. So we do have this area of supply that we have to be mindful of, but for the most part, we are bullish this pair. You can see from yesterday, it sort of closed almost like an indecision type candle with wicks on both sides, but we can see that it followed through today with a bullish reaction move to the upside. So we're definitely bullish. We want to stay on that direction. We don't want to trade opposite of that. But this is the 1 hour chart. We can see that the 1 hour is impulsing to the upside, and we may find some resistance up here. But yeah, this is on the daily time frame. I mean, the daily time frame. So if you drop down to the 4 hour chart, what we see right here, we see that price is pushing up. We have to be aware of a potential rotation happening soon. Why? Because of this. We do see what appears to be almost like a third leg, but this could be part of that impulse wave to the upside. So, we don't want to hold ourselves hostage because we see that. What we want to do is trade on the side of momentum. And based on what we see on the 4 hour chart, momentum is still to the upside. We do have an area of demand or structure right here. Look left, structure leaves clues. We have this area of 4 hour demand that we have to pay attention to. So, we're just going to mark this down right here. But for the most part, we're bullish this pair. There's no reason for us to look for a short yet. If we're scalping, yeah. But if we're day trading, not yet. If you go down to the 1 hour chart, what we can clearly see is that we're still bullish this pair. And price is slowing down right now. So what we want to do is wait for price to pull back. Price can possibly correct to this zone right here of 4 hour demand, but this is also 1 hour demand as well. But we may also get a more shallower retracement. It may not retrace as far as we would like. So then what I'm looking at right now is this candle right here. We see this indecision candle right around here. Something may be forming right around there, especially with these lows where these wicks are of this indecision candle. That's where I believe we can get some buyers to come in at. So then what I'm going to do, I'm just going to mark this area right here. I'm just going to mark it. And what I'm going to do is drop down to a smaller time frame to see exactly what do we see in this particular area. So then let me drop down to the 15-minute to see if it can give us more clarity on what we're seeing. So right now, this is the 15-minute chart, and we can see that this is an area where we have this cluster forming right around here. So then there's a possibility that this level or this zone or this area could potentially hold as support. But what we typically want to always see is a three-wave pullback. We want to see a leg A, a leg B, and a leg C. And let me ask you guys this question. Do we see that yet? Do we see the completion of a three-wave pullback yet? Yes or no? I'll just ask you guys that question. Do we see that yet? Yes or no? Okay, yep. Naomi said no, and we do not see the completion of a three-wave pullback yet. As a matter of fact, this one has some level of ambiguity with it because it could be sort of confusing. I know some people would see this as this first move as leg A, which it can be because we did get a break of this structure right here. Some people could see this as leg A, leg B right here, and we're seeing leg C form right now. So then, that could be a potential trading scenario right now. But in either case, we're looking to buy. But yeah, what I was going to say is that, but some people could see this this move with the break of this level as leg A, where this could be leg A, and then price could form a leg B, and then we get a leg C. That could be a potential scenario as well. So, when it comes to trading these three-wave pullbacks, sometimes it's more clear and as far as the waves, and sometimes it's not. So then, you just got to be aware of that. But for the most part, what we want to see is some type of three-way correction, some type of fake out. We got to see that move where the market makers fake out traders, where price will go to demand and then it act like it's pushing up, but then it'll come down and take out the stops, and then we'll see this push to the upside. So we want to see something like that. But I think, of course, we have a few levels where we could see buyers come in at right around here, which is what we identified first, and even down here. So going back to the 1 hour chart again, what we want to do is look for an opportunity to buy on a pullback in price. So then there's two zones that we're looking at. I'm going to pay attention to this first zone right here. But before I do that, let me mark out invalidation. This is my validation point right around here. So if price breaks and closes below this level on the 1 hour chart, then, we may have to abort our trade idea, our buy. But for the most part, what we're doing, we're going to wait for price to come to us and then look for an opportunity to buy. So let's do this. So again, we'll be waiting for price to come to this zone or to this zone. Let me just do this one first. So we have price come here. Let me make this smaller. So if price comes down to this zone, what we want to do is look for an opportunity to buy on bullish confirmation, and we can trade it to the upside, either to these highs where we have this long wick. We know we're going to get sellers right around here. So you can either do that, or you can shoot for an extended move up near this daily area of resistance or supply, what we talked about when we was on the daily chart. So yeah, this is one opportunity right here. So we definitely want to mark that and draw that in. So then this is where we would look for a buy. But we can also see buyers come in this zone as well. So if price gives us a deeper retracement, even though it'll be below this line, if it closes below this line, and we'll wait for a close above. But for the most part, we'll be looking for another buy. And we can trade it to the highs, or we can shoot for this extended move right here. So, two zones is what we're paying attention to, where we feel the buyers may come in at. So yeah, just be on the lookout for that. For the most part, order flow is still to the upside. So we want to stay on that side of the market. We want to look for opportunities to buy until the market tells us otherwise. So yeah, are there any questions or concerns before you actually, before we move on to the next asset? I think Marvin may have something that he wants to share with you guys. So, I'm just going to pass the mic over to Marvin, and he's going to talk about what he's seeing and what he's observing on the US dollar, Japanese yen. There may be some fundamental stuff, maybe in regards to yields, maybe that you can observe to get an idea of why the yen is selling off. But yeah, just like Melvin said, the yen has been selling off for about 5 days now, 5 consecutive days, which has really served as a tailwind for a lot of the yen crosses. But what's interesting about this rally is that we're seeing it even after Japan just released some information. They released their growth figures. Now, let me just pull away from here for a quick second. I'm just going to stop sharing real quick, and then I'm going to go to um, Google real quick, and then what we're going to type Japan and growth or GDP. Let's do that, and let's see. Okay, so then you can see here. Well, I know a few of the headlines like Japan rises on GDP data, rest of region shaky. Asian shares are trading mix as Japan's benchmark jumped on the news of solid economic growth. Japanese stocks seen rising another 10% after 3-decade high. Okay, Japan rises on GDP data. So then what we saw last night, or what happened last night, is that Japan released their GDP data. They actually moved out of contraction territory. So then this is one of the first economies in that part of the world out east that actually showed solid growth and improvement and an economic expansion. So then I was trying to look for a specific article, but it's not coming up. But of course, you can go to Forex Live. I know that's one of the news services we use, but Japan Q1 economic growth much better than expected. So then we get this much better than expected data print, from Japan. I'm trying to get the actual figures. Okay, Japan Q1 GDP up 0.4% on quarterly from quarter to quarter, but I was trying to see the year to date or the annualized. But yeah, I think this is good enough. But what we did see is that we saw the GDP did improve, growth did improve in the Japanese economy, but yet we still saw the US dollar Japanese yen rally to the upside. We continue to see the Japanese yen weaken, like we're seeing. Let me just do this real quick. Go back to our chart. Like we're saying now. So then what could be the reason for this? Well, we always know that, of course, for the pair US dollar Japanese yen is strongly correlated to US Treasury yields. And we see that with Yellen and just what others, like what Fed, Bostic, the Atlanta Fed, has been communicating for the past few days, is that there's still a reason or a justification for the Fed to continue more rate hikes. Like, even though the market is pricing in that we're going to see rate cuts by the end of the year, right now they're saying that of course, they lessened the number from 2 to 3 to now just a flat 2 rate cuts before the end of the year. We're seeing right now this expectation or this pricing in of possibly a tighter for longer or a higher for longer monetary policy position from the Fed. So then this is kind of helping to boost the US dollar versus Japanese yen. But and even other yen crosses. But I wanted to point that out to you guys because like, we also have to not look at the US bond market, but we should look at the Japanese bond market as well. So then let me just do this real quick. JP10 real quick. I'm just gonna do the bond price, and this is on the daily chart right here. Yeah, but I mean, you can look at it from the daily that we did see there was a bid in bonds. Let's just go to the 1 hour and see how that looks. But we saw bonds beginning to be bid and bought up as a result of some of just a strong economic growth. We see this demand for Japanese bonds, this demand for just to park their money there, since that's one of the first economies out of the east, out of that Asian docket that is showing expansionary growth, and it isn't showing any signs of recession. There's still higher inflation than normal. But in Japan, they know that most of their inflation is imported from other nations due to them, other nations like the United States, excuse me, hiking their interest rate. That's importing inflation into Japan. But we still see that there's demand for Japanese bonds. The bond market is
Which
going up.
contributes to the yen weakness.
Yeah, which is contributing to the yen weakness because the JGB yield is
Going
going
lower.
lower. You remember there's an inverse relationship between the bond price and bond yields. As bond prices move up, bond yields move lower.
And it's the yields that affect the value of the currency. So then the Japanese yen
Well,
would
yeah,
be
as far as
decreasing.
just expectations
Mhm.
concerning the rate, what interest rate is going to be applied to the currency, but we see the Japanese yen is selling off as a result. And actually, I mean, it's been pretty bid for a while, or
Bullish.
bullish, you can say. But yeah, like this is just a part of it. Of course, we know that what's been really driving yen crosses has been really the U.S. bond market and expectations over the Fed funds rate. So then I just kind of wanted to point that out, that we did get this development. We did see growth in Japan, but yet we're still seeing the U.S. dollar Japanese yen rally while the yen weakens across the board. So then that's the reason why it's important just to pay attention to what price is showing you, because even though we may get the macro data to come out, it's suggesting that the market should move a certain way or this should happen. Oftentimes that may not be the case. So then we can't just jump on macro news alone. We got to look at our technicals and see what price action is showing us, so we can kind of, because really, to be honest with you, the technicals is a visual plotting of how the market is interpreting the fundamental news. So then I just kind of wanted to briefly touch on that. Yeah.
Yeah. Yeah. But yeah, so then that explains it with these correlations and doing a little fundamental intermarket analysis. We see the yen weakening. We see really the dollar strengthening too. That's another reason behind why we're seeing this move in the US dollar Japanese yen. But what I want to do, I'm just going to quickly put a price alert right here. And we're just going to add an alert. I forgot to do that. So then let me just do that right now. Let me put the date. Today is May 17th. And then, we'll just notify when price reaches the zone, because we don't have to look at these charts all the time. Testing 1 hour structure support. And we say if 3WP is 3-wave pullback, look to buy on bullish confirmation. Yeah, we could say something like that. And let me just copy this right quick. Yeah, but yeah, we have this right here, this alert right here, and then you can put another one. I'll just copy and paste this one right here. So okay, and but this is support. This is more like a demand zone. Okay, buy on confirm. All right, same thing. All right, and if you want to, you can always place an alert on this invalidation. I'll just do it just for the sake of just doing it. So crossing down once per bar close, and then you can just say invalidation. Break and close below invalidation. Abort buy idea question mark. All right, so yeah, we have our alert set, and now when you have your alert set, you can move on to your next opportunity, which in our case, we got quite a few pairs that I could cover for today, because we just have more activity, even though certain things there's a level of ambiguity with it. We do have an announcement coming out later. What time is this?
Like in 6 minutes.
Yeah, in about a few minutes. Building permit.
Yeah.
So yep. So then yeah, we do have that. That can affect price a little bit. But yeah, we'll see what happens. But and then we have an announcement later on in the Japanese, session, trade balance right here, which is what time is this? That's this evening. So yeah, we have that going on. But yeah, all right. So yeah, you have the US dollar, Japanese yen. Let me do one more yen pair and then we'll move to something else. Let's do Kiwi yen. NZD-JPY. And we're looking at the 1 hour chart, but let me start at the daily first. All right. So yeah, I could just let me just, even though this is a good chart to look at really. But yeah. All right. So right now we're looking at the Kiwi yen, and we're currently looking at the daily chart, and as you can see, price is sort of testing an area of daily structure. As a matter of fact, I want to squeeze this in a little bit more. Yeah, you know, right around here is testing an area of potential structure. Really, this is probably the better zone right up here. But for the most part, this is an area that you need to pay attention to right now. But we do see price testing this area. However, there's a possibility that we could see price expand and break this area to the upside. There is that possibility. So because this area is not as strong as let's say this area up here, where we have these 3 consecutive wicks and peaks right here. This is a more stronger area of potential resistance up here. But you know, for the most part, what we can do is look for an opportunity to short. I mean, to buy, a potential buy, because you know, like we said, today's been quite bullish. It's been a bullish day. Now, mind you, there is an average daily range. If price has met its average daily range for the day, then we may see a deeper correction. And that's where that 1 hour correction comes in, because we may see price correct for the remainder of today's session, especially the US session. That's with the US dollar, Japanese yen, and the Kiwi yen. We may see price correct for the remainder of the day, and then we may see that buy opportunity sometime during the Asian session. But we can see here that we're bullish, but we're testing an area of daily structure. We cannot ignore that. This is an area of structure, you know, right here. So, you know, I'll just maybe make this red, but let's drop down to the 4 hour. So it's going to look pretty similar to what we saw with the US dollar, Japanese yen. We see here that price is expanding to the upside. We're bullish on the 4 hour. If we were to look for a buy, from a 4 hour perspective, it'll be right in this zone where we see this cluster right here, this sideways price action. So then that would be, you know, our 4 hour demand. And then from there, you know, we're still bullish. 4 hours bullish. It's in a bullish environment. Go down to the 1 hour. 1 hour is bullish. But, you know, we can see here that even in this 1 hour bullish move to the upside, we do have some level of structure that we have to pay attention to. We can look left. We can see that structure leaves clues. So let me just drop a line right around here. So we have this area of structure, this area that acted as, you know, support right here, support right there, resistance right here. And it broke above it, came back, tested the same area again as resistance, and then we see price pop up. So then this is a zone or a level or area that you definitely want to pay attention to as a historic level. We can even see right here that we have even rejection right there. So then this is a key zone, a key level that you definitely want to pay attention to. But what I'm going to do is look for price to give me a, you know, deeper correction. I would like to see price correct right down into this zone, into this area right here. Let me just draw it in right here. This will be my 1 hour demand zone right around here. So it'll be great if we can get that retracement. Now, will we get it? We don't know. But one thing I want to point out also is that the market loves to give you what is called harmonic corrections or harmonic pullbacks or moves. So there's a possibility we may get a shallower retracement. It may not retrace this deep. And how you determine the retracement is you look at the previous pullbacks. So from here, the last pullback that we had was from this high all the way down to this low. And oftentimes what you can do, you could just drag this last pullback, superimpose it at the high. If this is the high. And what we can estimate is that right around here is where we could potentially see buyers come in at. It's called the measured pullback. It's a way for you to get an idea of how far price can go. Like for instance, the last time, like on the last pullback, what we saw was this correction right here. We saw this correction. And it's not saying it's going to be accurate, but it can give you a ballpark idea. So then, right around this area is where we saw price go to. It could have went a little bit deeper, but it didn't. But then we saw price shoot up. But what you'll tend to see is that in the same way we have measured impulse waves, we have measured pullbacks. So let's just assume that this is an area of structure that we can look at. Well, I mean, it does coincide with some structure to the left. But what I want to do is go down to the 15-minute chart and see what we see right around this area. And if you look to the left, we do have this congestion area right here. So then this is a potential spot where we could see buyers come in at, like right around here. This potential sideways moving price action, this cluster right here is where we could see buyers come in at as well. So then what I'm going to do is draw in another zone right around this area, right around here. And we can just wait for price to get there. If we do see a correction, there's a likelihood that price may correct into this particular zone right here. So again, we're going to wait for price to come to us. And then from there, we're going to look for an opportunity to buy on bullish confirmation. And we can trade it to the highs or shoot for extended targets and trail our stop until we reach this daily area of resistance up here. It's up to you what you want to do. But yeah, we'll be looking for buys. So again, let's do this. So we'll be looking for an opportunity to buy on a pullback in price right here. Also, you can look for another opportunity to buy if price pulls back deeper. Look for another opportunity to buy, right around here. Let me put that out right here, right around here. And then we can just trade this to the upside. But remember to always look for buys on bullish confirmation. So again, this is quite similar to what we saw with the US dollar Japanese yen. Now for this one right here, what we want to do is look to see where we feel invalidation may take place at. And this one right here is a little bit tricky, but what I'm going to do, I'm just going to pick this hesitation candle. Right around the midpoint of it is where we can see some invalidation. If price breaks and closes below that level, then we want to look to abort our idea. But yeah, this is the Kiwi yen. This is an opportunity to buy. So do we have any questions before we move to the next setup? Going once, going twice. Okay, so we don't have any questions on that one. Let me go to our next pair, which will be the Euro Aussie. Let's see how that's moving now. We're up on the daily. We're going to start from the daily, work our way down. So the Euro Aussie. Okay, so right now we're looking at the Euro Aussie and we're currently looking at the daily chart. And based on what what classical chart pattern could be forming right now on the daily? Let me ask you guys that question. What could we see potentially forming right now on the daily that could hint to more downside movement? That can hint to some type of expansion or thrust lower in price. What do we see as far as a chart pattern, classical chart pattern? Remember, we have our double tops, double bottoms. We have our, flag pattern, channels, all that stuff. Okay. Yep. Okay. Yep. Marcus and Greg is correct. We see what appears to be a potential head and shoulders pattern where the right shoulder could be lower than the left shoulder, which may be the case, and I'll explain why in a little bit. But what we are expecting is a move lower in price on the Euro Aussie. We could see an impulse lower, and typically that impulse lower is, in most cases, it's the same length as the move from the head to the neck. So there's a possibility we could see price fall for a few days all the way down to exactly where price is now. This structure area right here, look left, structure leaves closed, right around there is where we could see price go to. So then with that in mind, we do have a bias for the Euro Aussie, and that's to short the Euro Aussie. So we'll be looking for shorting opportunities over the next few days on the Euro Aussie. But what we're assuming here is that price found support here and it's in this corrective phase, right? It's in this corrective phase. And remember, For every corrective phase, or not every one, but for about 70% of them, we typically see a three-way pullback on a smaller time frame. So then, since this is the daily chart, we want to see a three-way pullback on the 4-hour chart. And if you go to the 4-hour chart, we see what appears to be a three-way pullback right here. We see a leg A, leg B, and a leg C. And this leg C hit this high right here, found some resistance, and now we're seeing price slide lower. So then what we're assuming is that we could potentially see a reversal in price on the Euro Aussie. So again, what we want to do, we want to trade this right top, you could say. We can see stochastic is overbought right here. It's overbought. That's a sign that, hey, we could trade this right bottom. Is that structure? Look left, structure leaves clues. Is that 4-hour structure? And it's overbought. So this is on the 4-hour, so then we can trade that right top and look for a shorting opportunity at that right top. So what we're going to do from here, we're going to drop down to the 1-hour. And what do we see on the 1-hour? We see bearish price action, right? Price expanded lower, found some support right here. Now what we're looking for some type of correction to the upside. So then what we want to do is look for that pullback scenario, and we want to look to see where structure is. Remember, look left, structure leaves clues. But what you can also do is look for measured pullback. Like, just keep it simple. Like, what you will find out is that trading is all about simplicity and harmony and price action. So, the last pullback we had was this pullback right here. You can even use this one right here. Yeah, Euro Aussie has news at 9:30,
8:30.
or 8. He said 8:30, I think. Maybe he means that 8:30. Yeah. So then, we definitely got to pay attention to that. If the Euro has news,
I think it's in an hour. He's saying in an hour, 9:30 Eastern. It's 1 hour from now.
yeah. Okay. Yeah. But yeah. Not whether that news is important or not, we'll see. But for the most part, we're bearish right now, this particular pair. And what we want to do is look for an opportunity to buy or sell on a pullback in price. So you can look at the most recent corrections, get an idea of how far price could retrace. Yeah, unemployment number. So then that will be this evening, right? 8:30 or 9:30 p.m. this evening, I think, right?
Mm-hmm.
Yeah, for those numbers. All right. So then, we could look at the last correction higher. We could say, hey, this could be a correction right here. You can see price correct all the way back up here. Remember, take what price has done before and do it again. So then we had this last correction here. We could even look at this last previous correction right here, which is a correction lower, but we could look at the distance of it. Look at the distance of it, and we could say, hey, right around here, price could go round to this area. But we have an idea of where price can go. Really, if you look left, you can see that we have structure here. We have this area as support, this area as resistance with this wick right here. And we just have structure right around here. So then I think it would be smart to assume that, hey, the zone that we need to look at is right around here. This is our zone where we feel sellers can come in at, right around this zone, this area, right around here. So then this would be, where we look for sales at. We can just call this 1 hour supply. And what we'll do, we'll look for price to come into this zone, come into this area, and then we'll look for an opportunity to sell on bearish confirmation. Also, this is what we call market inefficiency right here, or an imbalance area. Some people call it fair value gap, but we have this area that can also act as an area of resistance. Now, what I want to do is go down to the 15-minute to see if there's anything else that we could see in this zone, in this area. And we don't see much. We have this supply area right here. The next major supply area is up here. So then there is a possibility we could get a deeper correction up into this zone. But for the most part, I'm just going to pay attention to this zone right here. Mainly due to the fact that, we have structure to the left. Look left, structure leaves clues. Let me drop a horizontal line there. We have structure right here. Also, we can draw in our Fibonacci. If this is the end of that correction. And what we can see is that the 38.2 to 50, is right around this area, this zone between the 38.2 to 50. is an important key zone. So we can see price um, find some resistance around this zone or around this area. That's one thing I just want to point out. So again, what we could do is simply wait for price to come to us before we decide to get involved. So again, if price comes to this area, we'll look for an opportunity to sell on bearish confirmation, and we can trade it all the way down to structure right here. This is the 4-hour lows right here. This is 4-hour demand, where this double bottom is on the 1 hour, where this cluster is on the 1 hour. So you can just exit right around here if you do decide to enter that particular trade. So again, we have a pullback, and from here what we can do is look for an opportunity to sell, and we can either shoot for the lows, just take profit at the lows if you want, or we can shoot for extended targets. It's up to you. It all depends on how aggressive you are as a trader, but we're looking for shorts. We're looking to sell, and we will sell when price reaches this zone right here. Now, what will our area of invalidation be? Well, it'll be right where this structure line is right here. Pretty obvious, pretty simple. But what we could do is place a price alert right here. This could be our area of invalidation, and we'll abort our idea if price reaches this particular level and breaks and closes above it on the 1 hour chart. But in the meanwhile, what I'm going to do is set up a price alert right here on Euro Aussie so that we can be reminded of when price reaches this zone, and then look for an opportunity to sell. So again, May 17th, and then we could just say price testing 1 hour strip resistance. If 3-way pullback, look to sell on bear. All right. So yeah, we already have that alert set up so that if price gets to this area, we'll be alerted. And if you wanted to, you can do this right now with the invalidation, or you could do it later. But for this one, we want to be notified when it crosses up and when there's a candle close above it, because if it breaks and closes above that level, then we want to abort, potentially abort our idea. It's not saying we will, because price can break right back below it, but we can just be notified when that happens. Break and close above. And validation abort sell idea question mark. All right, so then we have those levels already marked. So now all we have to do is just wait for price to come to us. We don't have to chase the trade. We can wait for the trade to come to us. So are there any questions about this? Going once, going twice. All right, so yeah, I have quite a bit that we can go over. I know we went over the US dollar, Japanese yen, we went over the Kiwi yen, Euro Aussie just now, and well, the next one is very similar. I could just do this one real quick. Euro Kiwi. We could just even stay on, if we want to, we could even stay on a 1 hour chart, because we're looking for a 1 hour correction, quite similar to what we're looking for on the on the Euro Aussie. But we can see we have a bearish environment on the 1 hour. 1 hour is bearish. 4 hour is looking bearish right now. 20 SMA, it's sloping and curling down at the end. So then that shows that momentum is shifting to the downside. And the daily is also bearish as well. But for this one right here, we see this daily correction right here, the daily pullback. But on this daily pullback, we didn't see a 3-way pullback. You go down to the 4 hour, what we see is just one leg A right here. So then there's a possibility that we can have leg B and leg C, but I believe this move is quite strong. And the very fact that we're breaking and closing above or below the previous area of structure could sort of give us a clue that markets may be shifting, and we may not get that 3-way pullback that we typically want to see. So in this case, what we're going to look for is a pullback on the 1 hour time frame. So again, we'll be looking for price to correct higher. And where do we expect price to correct to? Well, we have some obvious areas. The first obvious area is right here where the sellers came in at, right around here. This would be our first area. This would be 1 hour supply. But where else could we see? Well, that's when we look left and we see where is structure. So, we have this area of congestion right around here. The midpoint of it can be exactly where we can see sellers come in at. So we go to the midpoint of this congestion area right around here, right? So we have this congestion area, the midpoint's right here. We also have price testing the structure area, right here during this part. Let me just draw that in. So we have this structure area right here, this congestion, and then we have this area act as resistance right here. So then, the same area could act as resistance again in the very near future. So again, what we want to do is look for an opportunity to sell on a pullback in price. But before I do that, let me drop down to the 15-minute. Let's see if there's anything in this area that can sort of give us a hint or clue to this particular zone. And yeah, we do have something. Let me just draw in this from here all the way up to here, this area right here. Right, this zone can be the zone that we're looking for opportunities around. So again, if price does come up to this area, which I think would be the better area because this move down was pretty strong. The more parabolic the move lower or the move up, the more shallower the retracement. We may not get a deep retracement, so I'm expecting price to somehow respect this line or this area of structure right here, and then from there we can look for an opportunity to sell on bearish confirmation. But yeah, this is the Euro Kiwi. This is another opportunity we'll be looking for. So but yeah, just keep it simple. We see momentum is to the downside. You'll look for opportunities to sell once price reaches these particular zones. But let me mark this May 17th and just say price testing 1 hour resistance. Look to sell on bear confirm. I forgot to put three-way pullback. Let me see, F3 WP. So all right, that's a little bit different than what I said before, but yeah, you guys get the point. So then we see that we have this level, and validation would be up here if we get a deep correction. So we're definitely going to stay on the side of being bearish until we see price break this particular level right here. This will be our invalidation level. So yeah, so we can see price come here and we can see the sellers come in, right around there, or we can see price retrace a little bit deeper. We can see price give us a deeper retracement up to this area, and then from there, that's when we can look for a potential sell and trade it down here. So yeah, we'll be aware of how price reacts to both of these zones. But yeah, that's Euro Kiwi. So I guess that's it for these day trading setups and opportunities. We talked about the US dollar, Japanese yen. We talked about the Aussie yen. We talked about the Euro Aussie, and we talked about the Euro Kiwi. So I guess we can end with those for the day trading portion. What I'm going to do is pass the mic over to Marvin, and he's going to talk about what we're seeing fundamentally, and then we may end off early because I know we want to do the private war room today. So yeah, we'll definitely talk about that.
Yeah.
Soon.
Yeah. Yeah, exactly. Yeah, I think it'd be good. Like we, I want to encourage you guys before we, start, delving into the fundamentals. Like join us in the private war room, because we've been catching a few good runs, especially in Nasdaq. I know some of you guys are working, but if you can, just try to peek in, every now and then.
That's if you're not busy.
Yeah,
if you can. If you can't do it and you're in the middle of work, then just don't, because we don't want to get you in trouble.
Yeah, exactly. So then let me just do this real quick because I know we haven't talked about this in a bit. So then let me just go to, let me see, Google again right quick. Okay, and I'm going to type up something that we already know, US debt, let's fraud. because, as you guys know, Congress, along with Biden, they've been in negotiations on coming up with some type of compromise or resolution on whether they should raise the debt ceiling. Like, what they need to do for the U.S. budget, for the remainder of the year, since we've been hearing that they're running out of cash, they're running out of money. So then we got a few headlines. Um, I know Mel wants me to read
No,
this.
no, I didn't. You don't have to say that. I'm just pointing to the fact that we see the safe haven dollar climbs due to focus on the U.S. debt risk concerns. That could be one of the reasons why we're seeing U.S. dollar strength. That's what I wanted to point out.
But don't listen to the headlines. Like, sometimes even the headlines don't fully know what's going on. But yeah, that's true to a certain degree. Like, some of it's safe haven demand in the dollar, but you got to ask yourself, if the U.S. is on the verge of default, why would any country want to invest and rotate into a dollar, of a currency or an economy that's on the verge of default? So yeah, a little bit of that is true, but really it's due to something else. And of course, I'm going to get to it a little bit, but we see here how the US debt, you have all these headlines, the US debt ceiling isn't raised by deadline. What does default mean? Progress made in White House debt limit meeting talks to continue. Of course, we see on the news constantly, for those that, may, chime in and look at the news, you see them talking about default. You see them raising fears of, this won't be good for the global economy. It's really a fear tactic to sort of push Congress into making a decision, compromising. But of course, like, how is that impacting prices now? What's happening, like Melvin said, even with the dollar? What's happening with some of our commodities? So, of course, we know that this is a backdrop theme that's sort of influencing some trading behavior, even though it's not the most important. Like, to be honest with you, it's almost as if traders aren't so much focused on that, but they're looking at what is happening with real yields. So then, what I'm going to talk about is what happened to gold overnight and what we saw happening with gold positioning. So then, yeah, I'm just going to move on from here. But yeah, but first, while I'm here, let's go to the calendar. Let's see what came out on the economic docket. I'm just going to go to Forex Factory real quick so we can see what did the building permits and housing starts come out, get asked for the month of April. And as you can see, it pretty much came in line with expectation. We see building permits, which is really those city permits or the agreements, given by local authorities. They're giving, construction companies the green thumb, just approval to go ahead and start their construction projects. So then they have to be granted a permit. And we see that in April, 1.42 million permits were granted to companies, to construction companies, to start building, which is sort of like in line with expectations. It's off by a few thousand, but it's pretty much consistent with what the market had forecasted. And we see, even with housing starts, we see housing starts actually, came in. It actually improved from the previous month. In March, there was only 1.37 million houses that started with, construction. This is residential properties, but we see that for the month of April, we saw about 1.4 million residential properties constructed. So then this could be a good sign of course, sturdiness, that the real estate market is recovering, that housing is pretty, is holding up pretty well, even in the midst of interest rate hikes, because we still have that pipeline of interest rate hikes that still have yet to flow through and come through the economy and impact the economy. You got to keep in mind that even though central banks hike rates, like, monetary policy is transmitted through long and variable lags. So then the rate hikes that happen, the rate hikes that are impacting the U.S. economy now are those that may have happened 6 to 9 months ago. So then, of course, this is the building permits, and I'm pretty sure this kind of helped to boost the dollar. If we was to go to our chart, let me just go to our chart again, just to see what happened to the Dixie. Let's see. Did we see the Dixie bounce on that news, or did it pretty much stay consistent? Let's go to the 5 minute. Seems like right now it wants to pull back, but
yeah, we did see um we saw the Dixie, move up to test these highs up here, but it seemed like right now it's encountering some resistance and it's getting ready to rotate lower or soften and move to the downside. But just like I said before, I want to touch on gold. What have we been seeing in gold? What has gold been doing for the past few sessions? So then let's go to the 1 hour chart so we can see a more wider view of gold prices. And as you can see, gold has fallen below its 2000 handle right here. This 2000 handle, which is a significant level in gold, it has fallen below that after rallying above it a few, a few weeks ago or a few days ago. It rallied, above it. But you can see right now that gold is tumbling. Now you may be asking, okay, why is gold tumbling? Why is gold selling off? And it's really due to a combination of a few things. Now, if you read articles, they would attribute it to the US debt ceiling. I just think, that's not, they're just trying to find, reasons to sort of push people into fear or make people think that the reason why things are collapsing is simply because Congress isn't coming to an agreement. They're pretty much at this gridlock. So I think they're just using that as a reason to sort of coerce, Congress into sort of, trying to come up with a quick resolution and a quick agreement. But really, there's more to it than that. Now, it could be partly like the debt ceiling talks or the fear of debt default could be sort of a part of it. But I'm going to explain why in a little bit. But like as we talked about before, really gold is a byproduct of where rates will be. It's really a byproduct of real yields. And real yields are different than your nominal yields, which are your treasury bond yields. Like what real yields are is like the actual real interest rate in an economy. When you take out inflation, when you minus or remove inflation expectations, what is the raw real yield or real rate in the market? And if we was to, let me just pull up let me just do this real quick. Okay, we got this on one side, and let me just pull up um I'm just gonna go to real yields. We have a section here that talks about real yields or the US Treasury real yield. Now this is the daily chart. Let me just go to the line chart real quick. So then this is real yield, which is really the 10-year rate minus inflation expectations. And actually, we can probably go to another figure that would allow us to go to the hour chart. Let's just go to um, this one right here, which is really the nominal yield minus inflation expectations. So then let me just go to the candles and let me go to the 1 hour real quick. But as you can see, real yields have been moving to the upside over the last, 24 hours, really the last few trading sessions. And just like I said, really real yields is really what drives, you could say, a lot of the movement in gold. Because if traders, okay, how can I put this? Okay, if real yields are picking up, that means that the market is finding other instruments to sort of park their money that carries yield, because the real rate or a real yield attached to an instrument or attached to, let's say, well, on the dollar, you could say, makes the dollar a little bit more attractive. So then gold. So then for what we mentioned, we saw the article that said that the dollar has been rallying, but it's not so much rallying due to risk aversion, even though you can sort of put that in, but it's really due to what's happening with real yields. Where it's the bond market yield, it's the treasury yield minus inflation. That's what this T5YEIE. So then in this particular real rate, we have the 5-year bond yield. If we take out the inflation component or inflation expectation of component of the 5-year nominal yield, we get the 5-year real yield. So then this is where the interest rate or the real yield will be in 5 years from now, about 1.4%. And we see that it's been moving up. And as it's been moving up for the past few days, we see that gold has been selling off. So then so then when it comes to, gold, its price movement is based on where real yields are in the market. However, we could say that a part of it is due to the debt ceiling talks and the debt possibility of debt default. And the reason why I'm saying that is I'm just gonna do this real quick. Is because the market could be in an interesting way pre-positioning or pricing themselves in selves for a possible default because like what I mean by that is that the market could be selling off ahead of June 1st. I know they're saying June 1st is the deadline, but really based on certain economists and professors, they're saying there's a little bit more wiggle room that they have. It's really into July that they have until things get really, really bad. They have enough, for them to keep business going until July. But of course, all the articles are saying June, and I think they sort of fabricated or manufacturing this crunch, this time crunch, just to push both parties to come up with some type of agreement or compromise. But yeah, but this could be a needed sell off in order to eventually rotate back in and pile into gold if there is a default. Because what will happen is that you will see investors, you'll see traders rotate into an alternative store of value. If there is a default on a US debt and the US economy is fragile as a result of it, and we can't pay our bills, that means there's slower growth. It just means that we won't see business function as usual. We'll see a tighter credit crunch in the banks, like banks won't lend out as much, and there won't be this attractiveness towards the dollar anymore. The dollar will sort of lose its appeal if there is a default and we get, a lower credit rating. As far as the U.S. government's credit rating gets lowered, and we'll see this rotation into the yellow metal as an alternative store of value because really most currency should be based on gold anyways. Like it should be, gold backed currency, but we know that right now we're in this fiat system where it's not so much backed by gold. So we're seeing this sell off, which could just be really the market already pricing in or discounting itself to prepare for a possible bid if there is a default. It's kind of like they want a lower price, a better deal, so they can buy gold at a lower price because they're eventually expecting gold to rally to the upside. But so then it could be a combination of both. But really, to be honest with you, is really what's happening in real yields and rates. As real yields climb up, as there's no point in holding on to gold that doesn't carry any type of yield advantage. Gold is just simply gold. It's just a store of value. There's no extra interest rate or no extra premium attached to holding on to gold. So then gold is just a safe harbor. It's just a place to store your money. It's a safe store of value. So then, as real rates go up, if people can get more dividend and yield from holding on to other assets, they're going to sort of rotate out of gold in the meantime and move into those assets temporarily. But this could just be short lived because if we do get a default, we'll definitely see that luster, gold's luster restored, and we'll see a rotation back into gold, and that could be a good place to buy. So this is, I would say this is just simply a retracement in anticipation for a further bounce and extension of a rally in gold some weeks down the line. But yeah, so then I know I kind of said a lot. I know I probably bored you guys, but I just kind of wanted to point out what's happening with the dollar. The dollar is being bid simply because right now the market is pricing out some of the rate cuts from the end of the year, and we're seeing this talk about a more hawkish Fed, or there's more rate hikes that are needed. So then that's going to boost the dollar. It's also, of course, that's boosting real yields, which is in turn going to boost the greenback or boost the dollar. And as a result, we're seeing gold, which is priced in US dollars, sell off, as well. So yeah, so then that's kind of what we're seeing. Yeah, no problem. Yep, no problem, Marcus. But yeah, so right now I'm just gonna turn the mic back over to Melvin. Like, well, I guess we can just talk about the temperament. Like, well,
Yeah.
for today, what's interesting is that even though we're
You got a
seeing
financial report.
no, we didn't go there yet, but I mean, we can.
Yeah, just do that.
Yeah. Like, you know, we're seeing a strong dollar for today, but at the same time, we're seeing a positive risk mood. Let's go to FinViz real quick, just the heat map. And we could see that, you know, in our futures heat map, you could see across the board, across the top, you see our indices, equity future indices trading in positive territory. That's, you know, all of them across the board. But what's interesting is that we see the VIX picking up. We're seeing this uptick in volatility, even while we're seeing US futures, you know, equity indices move to the upside. So that just shows the type of unique environment we're in, that there's this disjointedness, or there's just this there's inconsistency. Like, a lot of our traditional correlations aren't making as much sense. But we do see this VIX pop up, which is usually reflective of fear, risk aversion in the market. We're seeing kind of both pick up at the same time. You know, it's as if I guess traders want to take on more risk. They're buying the VIX, they're expecting an improvement in volatility, but this could also mean that the market is somehow pricing in that Congress will come to some type of agreement. Like, this is all just political theater, and there will be some form of agreement, and there's going to be volatility until then. So that's the reason why we see this VIX being bid and bought up right here. But for the most part, we're seeing this demand, you know, being, you know, coming in, and this is all happening while the US dollar is sort of positive and strengthening as well. So these are interesting correlations, you know, for today. um you know, sometimes these correlations don't make sense, but you just trade
Mhm.
each asset individually. Don't worry about sometimes how they're interrelated, even though that is important. But you got to keep in mind that each one of these commodities, each one of these instruments are independent, you know, instruments and assets and resources that can stand alone, or could, or there could be a certain view about a certain instrument apart from the broader market view. So then just keep that in mind. But yeah, this is the heat map. It's fairly mixed, but mostly positive. Let's go to the Forex. We see in Forex, the Kiwi and the Canadian dollar and the Aussie are commodity linked high beta currencies, are sort of the stronger currencies among the Forex majors. And then we see the weaker currencies is the Japanese yen, the Swiss franc, and the euro. They're weakening for the session. And what's happening in the crypto space, we see Bitcoin also selling off, and the US dollar is a stronger, you know, currency. You know, Ripple, Ethereum, and Bitcoin are selling off. And it's interesting because Bitcoin, like, has lost, it's sort of losing its correlation with the Nasdaq. You remember how at one point the Bitcoin or cryptocurrencies used to be a leading indicator of what the Nasdaq would do. It was like the tail wagging the dog. But right now we're seeing a decoupling of that correlation, and it's more so connected with gold as an alternative digital harbor. So then, if there is something, you know, that will happen with the debt default, and we do see you know, fragility introduced into the US economy, then we should definitely see possibly a rally in Bitcoin, which is digital gold, in the same way as we would with traditional legacy gold, you know, as far as the gold commodity. So then we're seeing, you know, both Bitcoin and gold sell off, which shows that correlation there. So, but yeah, that's pretty much it. I'm not going to bore you guys any longer with fundamentals, because I think Melvin has a few more things, and I know pretty
Yeah.
soon we're going to have to move into the war room.
Yeah.
Pretty soon.
Yeah. Yeah. I want to also touch on that stuff, even with gold. Like, we could be here right now because, in all honesty, we could see a bounce in gold right about now. Like, I know it's been selling off, but it's right at an area where we could see demand coming in for gold. So then that's the reason why, like look at the technicals, trade what you see, even not what you think or not what you forecast. But for one, let's just get rid of all this stuff. This is stuff from before, from earlier, when we talked about
how gold was moving. But yeah, we can get rid of some of this stuff. But yeah, we can keep this right here, what we have right here, even this area of structure right here. But what we can see here is that price is testing this area of structure, this area of demand currently right now. We see, but let me, I'll move these later. But we can see that price is testing this area of structure where we could see potential buyers coming in right around here. This is an area of supply on the daily chart. So we can't ignore this zone. Price is testing this zone. There's a possibility we could see some type of reversal, primarily on a 4 hour or 1 hour. And if you go down to the 4 hour time frame, what we see price slowing down right around here. Let me just delete, because I know a lot of this stuff can get you even more confused, these markings. Let me just delete some of this stuff right now. This was stuff in the past that we talked about. Even if price broke to the upside, which it didn't, it maintained this area of resistance right here. And we see price testing this area right here. But what I wanted to point out was the fact that there's a possibility for us to see price correct right back up to this area before it heads down again, and we can see price slowing down right at this zone. And one thing you need to ask yourself is, whenever price reaches the zone, what do we typically see? What happened? Well, we saw price consolidate for a period of time, in this area before. However, what we could do, we could look at the very lows and see, okay, was there anything on a smaller time frame that can hint to each bounce that we saw in price from this zone? And you can drill deeper. You can go down to the 1 hour chart, and you'll see a few things even on the 1 hour chart. Right now, we do see consolidation. We see it looks like price may want to consolidate. Let me just say that it looks that way. But let's look historically to see what happened every time price was in this zone. So then we would get these crazy volatile type movements on price action. It's kind of, in all honesty, it's kind of hard to really say how price is going to move, because each time it came to the zone, we had a nice reaction to it. And then sometimes price would come back down to test the lows and then pop up. But yeah, this is a pretty interesting one. Gold is one of those assets where, your stop will get hunted. It'll chase your stop. So yeah, just be aware of that. But for the most part, if we do see price break these highs right here, and we see price break these highs right here, which is let me just call this, well, let me just make this pink. If we see price break and close above these highs, then what we want to do, we want to look for an opportunity to buy. So again, there's a possibility we could see a rotation now, a break above this high and go, and then from there we'll look for a pullback in price, maybe down to this shoulder area right here, and then from there we could see price expand to the upside, possibly up to this zone right here where we're expecting price to sell off again. But I just wanted to point that out because we can't ignore the fact that we're at an area of daily demand, and there's a possibility we could see this rotation higher. And in all honesty, what I would love to see is a 4 hour rotation, 4 hour bottoming. You can stay on the side of selling for now until we see that rotation on the 4 hour, because it's quite bearish. In all honesty, we're definitely in a bearish environment. The 4 hours bearish, daily is somewhat well, it's more so neutral, you could say, but it's slightly bearish. But yeah, just stay on the side of momentum. Look for sales for now until we see that reversal take place on a smaller time frame. So again, going back to the 1 hour, if we do see price break and close above this, look for a pullback, then look for an opportunity to buy on bullish confirmation. But that was with the gold. What I want to do right now is well, I may just touch on it later during a private war room session. That's what I may do. As far as NASDAQ, touch on the NASDAQ during the private war room session. But what I wanted to do before we close out, let's go to, I think Marvin, he talked about it before, the Dixie. And right now we're looking at, of course, the daily time frame. And what we can see here is that price is testing an area of structure or resistance. Look left, structure leaves clues, as a matter of fact. But we can keep this line here But you know, right around this area right here, we see structure. Look left, we can see that price tested this area right here, tested it right there, tested it right here in this area multiple times with these wicks on the daily. Tested it right here, but you guys get the point. This is a key zone that price is testing right now. So then there's a possibility we could see price rotate really, really soon. As a matter of fact, it may be wise to treat this as an area of supply or resistance. You know, this zone right here, this area right here. So there's a possibility we could see a sell-off in the dollar happening soon. You know, that's just one thing I wanted to point out. There's that possibility. So going back to or looking at this right now, we see price create this hesitation candle and it pushed to the upside. Well, what we could potentially see is a pullback on the 4-hour, a 4-hour correction. Okay, wow, these, yeah. Okay, so yeah, what we could see is a pullback on the 4-hour. So right now we could see US dollar weakness. I think we may see US dollar weakness for the remainder of today's session. And then we could see price come back down to this area, this cluster area on a 4-hour. This is 4-hour demand, and we could potentially see another reaction to this level to retest the highs, because I think we may see that rotation soon. But we can see price come back to the zone, and then we can see another retest, and then from there we'll get a break, you know, a top form on the dollar. But we'll see. But you know, I'm still bullish on the dollar. It's just that right now during the US session we could see a potential correction lower. So you may want to stay on the side of US dollar weakness during the US session, especially if you're scalping the markets. Let's go down to a smaller time frame like the 15-minute, and let's see what's taking place. So then on the 15-minute, but yeah, order flow is still bullish, but if we do get a break of this low, then we definitely want to look for opportunities to scalp to the downside until we reach this zone. So yeah, until we reach the zone. But yeah, there's a possibility we could see something like this. Boom, 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 boom. And then from here, get another consolidation break, pull back, retest the highs, get another consolidation break, and head lower. So yeah, we could see something like that with price action. But yeah, that's it, guys. I don't want to take up too much of your time. I may cover the NASDAQ on today's private war room, what I'm seeing from a higher time frame perspective, and how we should trade that particular asset for I mean during the New York session. But yeah, I hope you guys got something out of today's session. We really do appreciate you guys. Thank you guys so much for coming to today's session, and I hope this was helpful. I hope this was beneficial to you guys. And as we say at the end of every single meeting, remember to always count your blessings, not your pips. And we will definitely see you soon. Stay encouraged, stay hopeful, trade with discipline, and we'll definitely see you guys in a little bit if you can make it in the private war room. But if not, all is well. We'll most likely see you on Friday. But have a wonderful rest of your day, and we'll talk later. Thank you. Yeah, thanks, Danny. I didn't know that you were in here. Thanks, and we'll definitely see you guys soon. All right, talk to you later. All right, get in. Bye.